The last thing you need to know about your target date fund is it's not going to time the market. It's going to time your retirement. How has the recent stock market affected your retirement portfolio? Do you have to work longer? Can you retire earlier? Well, today I'll break down target date funds, how they work, what they are, and if you should look into your own target date funds in your 401k coming up. Hello everyone, my name is Matt Ragudo. I'm a chartered retirement planning counselor, and I help individuals navigate towards their ideal retirement through financial planning and retirement planning. If you want information about retirement planning topics like Medicare, 401ks, and how you can better plan for your retirement, consider subscribing. As a financial planner, I must say that this video is not meant to be relied on or construed as investment, legal, tax, accounting advice. Always consult your own individual advisors before taking any kind of transaction. Okay, so I get asked a lot of times, what is my 401k? I don't know what it is. I don't know how it works. Well, today we're going to talk about target date funds. So what exactly is a target date fund? Well, a target date fund kind of takes into consideration when you're going to retire. So if you're currently my age, I'm 35, and I'm going to retire in 35 years, my retirement fund would be the target date fund of 2055 because that's the year I intend on retiring. Now, all of these funds are broken down in years of 5, so you can't choose target date fund 2056 or 2057. Well, as of this video anyway, you can't. They break them down into just 5s, but that's kind of how you choose a target date fund. So how do these funds actually work? Are they just pegging that the market's going to do great at 2055 and put all the eggs in the basket then? Not quite. So what these funds do is they quote-unquote slide their equity and bond mixture in a diversified way. So for someone who's retiring in 2055, most likely my portfolio is going to look something like 85 to 90% equities, so that's stock, and anywhere between 10 to 15% of bonds, so corporate bonds, treasury bonds, things of that nature. And slowly, as I move toward my retirement, so potentially when I'm around 50 or 55, the portfolio will slowly start taking away money from equity and push them into the bond allocation. These target date funds have two types. You can get a passive target date fund or you can get an active target date fund. The passive target date fund is going to be more of your passive investment type strategy where there's not going to be too much movement, too much activity, and such the fees will be much lower. Typical fees for these passive index funds can be anywhere between 10 basis points, so that's 0.10%, and potentially upwards to 0.6% or 60 basis points on the expensive side. Now the active target date funds are going to be more, like in the name, it's going to be more active, and what that allows the manager to do potentially is to get more return by having someone actively manage the fund. Now, because that somebody's going to be watching that fund, it's going to be more expensive. So you're going to be looking at potentially 2 to 3 times that fee of the passive counterpart. So for example, if your passive counterpart is 20 basis points, potentially the active could be 60 basis points, or even upwards of 100 or 1% or 1.5%. And be sure to look into the fund if it is active or even passive, because they could be called funds of funds. And what funds of funds is, it's multiple funds managed by another fund. So you could have maybe 2 or even 3 layers of expenses built in to that fund. Target date funds, there is something for everyone, but it is not for everyone. Now what I mean is, if you wanted to have a fund that pretty much you just automatically put money into this same fund year after year, paycheck after paycheck, and when you retire, you have a pretty safe and pretty sound investment, this may be the option for you. If you're someone like me, who went to school to get his finance degree, spend 5 or 6 years doing financial planning, trading, investing, then maybe you want to look into exactly what your fund or what your 401k has as their investment options. So, back to that, who is this 401k target date fund for? It's for more passive investors who just want to choose something that they can rely on, that's going to just, stick with them for their entire term at this 1 or 2 employers. Now, next I'll go into why you might want to not take that option and actually look into what's going on. But first, I want you guys to check out this video real quick. Alright guys, so before I forget, I wanted you guys to comment below on how much your folks' target date funds are costing, what that fee is. Leave that in the comments so we can compare and see which funds are the least expensive, and I can go ahead in the next video and kind of compare them side by side. Alright, back to the show. The disadvantages now of the target date funds and potentially who it might not work for are those folks who, like I said, want to take a more active role in their retirement planning options as far as investments, and someone who might have a financial professional helping them and guiding them through. I always suggest understanding how much these financial advisors are charging and what their basis for their advice is, because sometimes it's better to choose an advisor who is actually being paid to help you via fee. Now, I'm not going to go into that in this video, but you could hire retirement planners, financial coaches to help you figure out how to best invest your money, and sometimes that's a more advantageous route than the target date fund. The other reason why you must look into your target date funds is not all of these funds are created equal. Like I was saying earlier about that 2055 fund, for me, that range, 85 to 90% of equity, that's a big difference. If my portfolio is $500,000, let's say 5% is a big chunk of money. It's $25,000. So that's difference in equity position is a big deal. Also, how is the equity invested? Do we have a lot of US market money? Do we have a lot of foreign money in there? What are the sectors? Are they in technology? Is it just large cap? Are we in consumer? Are we in discretionary? Where is the money actually invested? And a lot of the funds don't really tell you what's going on under the hood, and you could potentially be spending more money than you need to. And the last reason, and it's going to apply kind of to what's going on in the market, the last thing you need to know about your target date fund is it's not going to time the market. It's going to time your retirement. So if we have an awesome bull run 1 year before you retire, most likely you will not be participating in that. On the flip side, if we had a terrible bear market in your 40 to 50s and your retirement portfolio loses 50%, it's not going to really care. So should you take an active route in investing your 401k? I always say it depends on how close you are to retirement, your resources available to you, and what your fund actually has, your 401k. Some 401ks have 60 to 100 options. Some 401ks only have 20 options. So it really depends on your own 401k. And there's ways that I can go into other videos about how you can more diversify your portfolio when you hit a certain age, because you can take some of that money out, put it into a IRA and choose whichever options you want on your own self-direction. Using Schwab, TD Ameritrade, all those guys have what's called in-service distributions, typically from your 401k, that will allow you to further diversify. And also there's things like accumulation annuities, which will help you in a way protect some of that hard-earned retirement gains over your work time. So I hope that answers your questions on 401k target date funds. Be sure to check back here, and if you did enjoy this video, please like it, and I'll see you in the next one.